Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone. This episode is part 2 of Stephanie Wickham's chat with Paul Coffey, the founder of Coffey Accounts and a brilliant advisor for freelancers and small to medium business owners. Paul is an expert on all things accountancy and setting up sole traders and companies, so in this part 2, he covers why setting up limited incorporated companies can be beneficial, why it pays to do the right stuff early, busting the myth of buying assets through the company, and how Paul helps the most through Coffey Accounts. If you haven't listened to part 1 yet, go back in your feed to find out more about Paul and how he helps freelancers get started in Ireland. And make sure to share this with someone you know who needs it. Enjoy!
I think you hit on a few things there around valuations. To be honest with you, even with a lot of my Irish clients, because the economy is doing well here, people are doing well, and the tax rates are going up for a lot of sole traders since their profits are rising. There's only so much, particularly for younger sole traders, they can only shelter so much of their income through pension contributions, etc. And even with the new pension rules, companies, for most average small Irish limited companies, pension rules are very attractive still, pretty much up to 100% of your salary. So that is a reason for going into the company is still very attractive. For me, I actually when I say sell, I sell the idea of the limited company to people because I believe it's the right structure for them, but also in many situations, but mainly I don't sell it as a tax saving scheme per se.
Gosh, yeah.
Sometimes that's a benefit of it, and sometimes that does happen, and sometimes there's very significant tax benefits for people. I actually save it because, as I found myself, even where I sole trader for many years, and I just found the tax planning around being a sole trader can be quite difficult after a while. You're trying to run a business. You're also trying to save all this money so that you've loads of money to pay the taxman every October and pay your pensions and pay everything. And, I just got a bit annoyed about it. And I found, so for me, and what I find with a lot of my clients, it's more the constancy of the limited company I find is beneficial. It allows people the room to plan. They're not hit with large, unexpected tax bills. Corporation tax is generally managed a bit better than income tax.
Can I ask you a question there? Explain that. So what do you mean when you say that?
So when you become a director of a limited company, the only real way, as you know yourself, to take money out of that company in Ireland is either through salary or through bonuses on salary, where you get taxed as a normal employee, or with the added benefit to the company of no employer's PRSI, so no social taxes for the employer. You just pay employee social taxes, which in Ireland, employer social taxes are 10% ballpark. So, that's a nice saving for the company. Or through pension, or through legitimate tax-free traveling subsistence expenses. So if you're traveling,
scope.
And nowadays, really, you need to be very careful with that. And it has to be reported. There's also, I suppose this year it's €1,500 per employee / director. There's the employee benefit for vouchers
Tax-free.
or for sporting clubs, tax-free. So that's a nice, look, a lot of people take that out in December. Say if it's a dual director employee company, that's up $3,000 tax-free just before Christmas. It goes towards Santa and all the rest. But generally, for me, the constancy is you pay yourself salary every month. You pay your salary every month. You pay your taxes on that salary. You pay your payroll taxes. and you make your pension contribution. So you know every month how much money you have in your private bank account, how much you have in your business bank account, and you know your taxes are being paid as you go along.
Mm-hmm.
Your corporate taxes are due generally up to 8-9 months after the year ends. But in Ireland, as you know, the corporate taxes, like mostly particularly with service companies, we try to eliminate. I know I've seen in previous podcasts you done with, I think was it Maura Ginty, I think, like she was talking about, say for the larger companies that would have excess profits, the company structure works very well because tax is 12.5%. And once it's paid, that's it. For a lot of my clients, we tend to kind of wipe out the tax in the company, to be honest with you. We try and take the profit out in salary or reduce it down in pension, or basically work it that there's less, for service companies anyway, there's less profit because of the surcharges.
Yes.
So the
So-
surcharges do affect professional service companies.
So this is big red flashing lights,
Yeah.
newsflash. We talk so much, and the media talk so
Mhm.
much about how the big corporates pay 12.5%, and
Yeah.
actually, there's now changes at a kind of a global level that will
Yes.
soon to become
Go to
15%.
15, I suppose. Yeah. Yeah.
That's only going to happen for a small cohort of Irish corporate
Yeah.
entities. But the majority of Irish entities, and particularly the ones that, are professional service firms, or
Mhm.
as you said, in that space,
Like myself, like probably like
Like
everybody's
us.
in that, like yourselves.
you have a higher rate of corporate tax, and that just doesn't
You
really
do.
get published, because to the extent it's called closed company surcharges, and you're entirely right. And this is where a really good accountant will come up, like what you just alluded to there is a year-end planning exercise that the
Yeah.
accountant goes through with you. They look at, where's the business at? What do you need to pay? And is there anything we can do to benefit your situation and save you
Mhm.
tax at the same time? Like, that's a brilliant little common
That's-
tool, but an important one.
That's what we try and do. So say like for myself, for example, any profits. Now it's only once off, so I mean it's still better than income tax. Don't get me wrong. And if I want to store money up in my company, to pay it at 20% and leave it there, if I feel I can get it out at the end of retirement relief or entrepreneur's relief at a lower rate, is still potentially beneficial. The net effect of the surcharge is that for professional services, and the range of professional services is very broad, revenue interpreted very broadly. It is essentially, I suppose, it's 19% is your corporate tax rate, is what it kind of averages out at. So instead of being 12.5%, it's 19% really is what it. Now you have capital allowances playing into that, you have tax allowances, etc. But top line, we're looking at 19%.
And
So
obviously,
that's-
assuming as well, then I'm probably going off on another tangent, another podcast. This is where as well, clients will often say to us, should I go off and buy a property and put it into my company? And the answer is no, please don't do that. Don't do that.
Or
without
buy a SUV or whatever, like
Take it
that's a
twice.
common one. Yeah.
Yeah.
No, look, and look, I suppose the advice on property changes from year to, I remember 20 years ago to be saying, put the property in the company. Then they're saying, no, you need to hold it privately and rent it out from the company. And that's the stuff I would actually nowadays tend to get external advice on, to be honest with you, because it has to be structured really, really. You need somebody who's very used to doing that. But when clients come to you, I'll buy this through the company, I'll buy that. You're like, no, you have to really get advice beforehand. Even simple things like having a car in the company, you really have to think that through. You have to be like, you have to benefit in kind, issues around it. And I'll come back to that actually. If you have time, the benefit in kind as a whole is I suppose the big thing to be careful with a company for your clients, if they're looking at it, particularly if people are coming in from abroad, like for instance in the UK, they have a very generous dividend system. In other parts of the world, they can have tendencies to have more generous ways to get money out of your company.
Australia, they don't have benefit in kind.
Yeah.
The company pays the tax, the individual doesn't.
Joy.
Yeah, exactly. So, you've got lots of different systems, and I think it's about understanding what are you trying to achieve here, and how does that look like now that you're in this new system. You're right. Benefit in kind is a very expensive area if it's not done correctly. One of the natural questions that people are going to have when they listen to this is, well, what does Paul do? You've already spoken through the registration of the trade or the company.
Yeah.
Financial statements. What else? So payroll.
Yeah. So look, it's actually a suite of offers that we offer. Sometimes people come to me and set up their company through me and then try and manage it themselves, and I never hear from them again, very occasionally. But most people would not go that route. So generally, we'd set people up, and that's one part of the service. And then we offer a suite of options along the lines of, look, for your average service company, we generally try and get them on software. Software I use be Xero, and that helps them with invoicing and managing bank transactions and things like that. So if people are low level transactional, so if they maybe 2 invoices a month and maybe 5 or 10 expenses a month, we tend not to do monthly accounting procedures. It just doesn't make financial sense for them or for us. Do you know what I mean? And we just kind of broadly manage it every quarter, and then do financial statements at the end of the year and all the documentation around AGMs, compliance with the company registration office, all that side. And if you have a more intense level of activity in terms of your level of invoicing, so generally, if you're a more broad-based trading company with a number of employees, we would tend to veer towards services more towards monthly management accounting and more intensive interaction. And for every company will have a payroll offer. Yes, we offer the payroll as part of our quote.
Perhaps a silly question, but like, they're using Xero.
Yeah.
So they put the invoices on the system,
Mhm.
and then you produce monthly management accounts, or it takes different.
It takes different levels. So quite often what I will do, so Xero is quite flexible for us. There's a few different levels of package, but if you're on the standard package, you will also have access to a thing called HubDoc. It's like Dext. A lot of people might be more familiar with Dext. It's a document reader. So you have an app on your phone, or you have an email address that you send documents to. It reads the documents.
Wow.
We see it, and then we introduce those to Xero with a bit of work, and it reads our behavior over time. I suppose generally what I do at the start is, as part of the setup process, I will give probably at least an hour of time allocated in a quote to help people set up on Xero. And generally what I'll do is I block them off from all of Xero except the sales part
Okay. Yeah. Keep it
at the
simple.
start. So we keep it very simple. They're blocked off. And because in the past, what I did is, I tried to introduce people to Xero full on. I do 5 or 6 hours introduction with them. And you know what? They're difficult. They're difficult packages to deal with if it's not your business. And they'll sell you this and say they're doing this, they're brilliant, Xero will make your life so easy. And they're brilliant packages, but if you're a non-accounting financial person, it needs a lot of work to get up to speed with them. So we tend not to go down that route anymore, and to get people up to speed with the sales side, manage their sales side, and then we manage the creditors, purchases, bank side. So most people who might have 1 transaction a month and maybe 2 or 3 expenses, they don't need management accounts. They know what's there. And at the end of the month, we'll do a payroll, we'll manage their pension payment, and job done. And it moves on. And then the real complexity comes at the end of the year when the accounts, funny enough, if you look at a quote that I would give somebody for the service, setting up the financial statements and the abridged financial statements and all that is only a portion of that, to be honest with you. It's the background administration and documentation that is difficult for clients to see, that really is actually more important for the smaller companies. Or say not small, they could be quite big, but that have low level documentation requirements in terms of maybe 2 sales invoices a month.
And I think as well, there's a risk that sometimes people, and we see it sometimes, it's just filling out forms. That's a massive oversimplification of what a good accountant does. You said at the
Yes.
start of this call that your thesis was on the high failure rate of businesses.
Yeah. Oh, God, yeah.
Yeah, yeah. Now, the
It
reason
was,
why
yeah.
one of the main reasons businesses fail, even in an environment that encourages economic activity, is because
Yes.
they don't have a visibility over their cash. They're not managing their cash. They don't understand where they're at. And you know what? That keeps people awake at night. It probably doesn't keep a consultant who has 2 invoices a month awake, because they know
Not at
where
all.
they're at. But I
Yeah.
think what kind of comes through to me, linking those 2 points together, is if you are in a business where you have either a lot of people, a lot of clients, a lot of transactions, a lot of people to pay, you should never underestimate the value of having somebody to guide you through it and take that pulse once a month, which is actually
Yes.
the management accounts. Even for me now, I find in our business, there's a couple of metrics that I just, to stay calm in myself,
Mhm.
I need to know, is this okay? Because there's a lot of flurry of information that people are dealing with these days. It really does
Yes.
it reduces stress to offload a little bit, pass that book to somebody else.
Very much so, like, yeah, and that's actually growing part of the business, to be honest with you. It's a massive, I suppose what I find is that people are more financially literate in many ways nowadays.
Mm,
Um, they want to get efficient structures in place. They're also much more up to date and comfortable with, information technology, with software, with apps, etc. So, people just want to know more, and rightly so. So
mm,
so for us, that's a challenge. We have to set ourselves up to provide those services, but there's also opportunities there. And so you're right. I mean, look, different businesses need different things. A lot of service companies, a lot of people move to Ireland, or they're providing services back abroad. They really want to know that the tax situation is okay. They don't want to come
yeah.
to Ireland and get into trouble with revenue. So for them, a lot of your customers, or a lot of the people listening here today, for them, a lot of it is, can I get a payroll, build up a credit record, buy a house, and sort out all those practical things. And, really, I know how much in my bank account every month. I just want to know that I can get it out without having any trouble with revenue. Then I can set my household budget and set my company budget, and I know where things stand. If they've, as you said there, a more complex business with employees, products, multiple services, etc., then the management accounting side of things really becomes important, because
Mm.
you have to manage your cash to stay ahead of your bills, and then also to make sure you know unexpected tax bills. And that's the big one. And actually, just one of the things I mentioned there that ties into the sole trades versus limited company conundrum as such is that if you're coming to Ireland, you might find different. Just my experience has been that sometimes the Irish banks can be a little bit conservative. And if you set up as a sole trade, you have one set of accounts, one set of profit, one set of figures that the bank read. And then you go into a company, you have another set of accounts, another set of figures, and another type of salary that you're receiving. Sometimes the banks have trouble with that. Like, I know it sounds mad.
You mean raising
Um,
finance?
yeah, like, if like and not just anecdotally, I've come across situations, I suppose, where unless there's really significant funds there, as in a very significant deposit or something, that directors can have some issues getting mortgages. If they
Yes. Oh,
don't have
yes.
that 3 years,
Yeah, that's true.
and what's happened
So,
is they start off the sole trader,
and then they
and the
roll
bank
it.
says, and then they roll into a company, and the banks, and sometimes some of the financial institutions go, oh, we need another year, we need this, we need that. And you're like, oh, for the love of God. So you have to take that. So what you said at the start is, what's your plan?
Yeah,
Part of the plan is your personal financial plan.
yeah, it is. And you work
Do
back
you
from
want a
that.
house? Yeah,
I always ask clients that in consults. Are you coming
yeah,
here to buy a house? Because there's a lot of moving parts, isn't there? Now, I
yes,
do know there is one mortgage provider that we tend to kind of work with quite closely, and they tend to be able to kind of accelerate or bypass that issue.
yeah,
And that's
yeah,
a massive stress reliever for clients,
huge,
because to
huge,
some extent it's a paper problem they're encountering, the
massively
rationale
so.
of,
And
of
just understanding.
and that's actually a really good takeaway. Doing business in Ireland is relatively simple, but
Yeah.
doing other things around your business can sometimes be harder. So, for example, if you want to
Mhm.
run your business, you can do so quite easily, but you might inadvertently cause yourself problems if you want to use the income from that business to buy a house, for example. And
Yes.
having somebody who at the start of the process doesn't just do as you tell them to without actually
Yeah.
asking, like I often say to, the team, when a client asks us a question, don't ever be shy to turn around and go, and why do you want to do that? Because that's what,
Yes.
people want. They want, we live in an age where digitally, AI, all these things can do lots, they can automate things, but you can never
Mhm.
fully automate common sense. And sometimes
No.
common sense is so helpful when you enter a new market and you don't know what questions you need to ask.
Yeah, and actually, I suppose I see you've done a number of podcasts on this, like, around mortgages, around savings, opening bank accounts. Like, they're actually probably the things that people don't think about enough, because they
Mhm.
say, look, Ireland's another Western economy. All these things will run smoothly. They do run very smoothly if you have an Irish passport. They do run smoothly if you've lived here before. If you haven't, then you have to have a little bit more preparation. That's just my experience. And even for friends who lived abroad for a number of years and came back, like yourselves even, things like licenses,
Mhm.
insurance, like you have to kind of be prepared to put a little bit of time into it and kind of work your way through it. But the mortgage is a big one. I mean, talking to somebody like yourself or any of the advisors you recommend around the mortgages, it is something to really, I really do say that to people. There's your business plan and there's your personal financial plan. And sometimes you might have to actually do something counterintuitive in your business that makes it pay a little bit more tax, or you have to do something
Yeah,
to
exactly.
sort out the financial stuff because you need that personal stuff sorted first.
The means justifies the end ultimately, doesn't it? Yeah.
Yes, yeah, and smoothness in how you earn your income. The bank want to see you've got X amount of income coming in every month, you've savings, you've this, and you don't like gambling. And then,
Yeah. Yeah.
you're on the way. You're on the way after that. Then,
Speaking of the end, we'll have to
Mhm.
wrap up because I know we're a bit
Yeah.
tight on time. But what I
No,
want to
that's
do
yeah.
beforehand is, I suppose, to stress, obviously your business is completely separate to ours, but we
Mhm.
routinely refer clients onto you. And I'm
Yes, yeah.
conscious that there might be people listening to this who don't feel or want to talk to us, but want to go directly to you. How do they
Yeah.
contact you, Paul? What's the way people make contact with you?
Well, do you know what? I'm a little bit backward compared to yourselves now with the websites and stuff. I tend to work on a referral basis.
Totally fine.
Which is so I suppose the main thing for me is my email address is paul@coffeyaccounts.ie, or my phone number. Just, give me a call, 086 0740880. And to be honest with you, for me, that's the main point of contact. A lot of my work nowadays, for the last number of years, comes from referrals from people like yourselves and from current clients and from the mentoring and teaching work I do around here in Ireland.
And for the avoidance of doubt, that's a reflection of the standard of work that you do and the quality of service you give your clients.
I hope so.
Referral,
Yes,
it
yes.
is, and I think that's why I think people do well kind of to reach out. And just also for the avoidance of doubt, if people do reach out to you, do you charge a fee for an initial discussion or how does it work?
Do you know what? At the moment, I tend not to. If it's kind of within that first half hour introduction, getting a feel. And look, if somebody doesn't want to work with me, that's no problem. I suppose because I don't have the traditional website, etc., where I can inform people of my costs and all that up front, I tend to just, I arrange a meeting with you, have a chat. And look, for me, I know it sounds silly. I like talking to people with different experiences anyway, and that's part of my business from start with. So I'm happy to meet you, talk to you. I'd be confident that if you were moving to Ireland, that I can help you with your proposition and that I can be competitive when it comes to cost and service provision.
We love working with you. So long may it last. And thank you
Exactly, long may it last.
so much. Your details will be in the show notes.
Great
I think
stuff.
there's definitely appetite for another episode on benefit in kind, some of the things that we spoke about today, pensions, all these different things. That's for another day. But for now, thank you so much, Paul.
Thanks very much, Stephanie.
We look forward to having you back again in the near future.
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.